All right. So on Tuesday, we define liquidity as areas of what? Of many orders. And in layman's language, I explained that it is the fuel needed to what? To move the market. Okay. It is the fuel needed to move the market. So that is what we are going to be looking at. How do we locate these areas? What are the things that define these areas? So some of the things I can say is that some of the areas that we can use are yesterday's highs, previous week's highs, previous high, double bottoms, double tops, equal highs and equal lows, last month's high, last week's high. Then also we can look at the inducement aspect, that is the pivot liquidity. Then we have one vital one that we refer to as the trend line liquidity. All right. So for instance, with this analysis I did here, this red slanted line here is this one here is what? Let me use that notation to this one here. The red line right there is referred to as trend line or liquidity. This equal high liquidity, equal low liquidity. Okay. Then we have what we call, so we have the equal looking like M and W. Okay. Then we have the triple tops. Okay. We have the triple bottom and so on, which we refer to as all the equal lows and all the equal highs. Then we have the pivot point liquidity, a pivot point or liquidity. Now a lot of people represent these areas with the dollar sign. So anytime you see somebody's chart and you see dollar sign, the person is referring to that area as an area of what? Liquidity. Let me clean the drawing. Let's come back here. Okay. All right. So now I love to always trade away from liquidity. What I mean by that is I don't want to be part of the liquidity, but I want to be what? I want to be trading with those who are trading without the liquidity. So we can use liquidity to make entry, and we can use liquidity to determine zones, and we can also use liquidity to determine our take profit levels in the market. All right. So this pair cover 25 has been on what? A downtrend for some, if I'm not lying, some months now or weeks now. So I was looking to only sell that market. So yesterday I did the analysis in the morning, and price didn't work out for this first zone. It hit my SL, but then the second zone at the top here, okay, which is at the top of the wick there, was hot, played out for me. And then you can see I've recovered that amount I've lost here, and I've made more on that. And I've turned my account, yeah, that is, I've doubled it with this particular trade. Okay. So you can also do the same thing, knowing fully well what we are learning. All right, now let me go in now. Let me use a different pair so that we can start spotting certain. I'm not doing analysis. I'm only teaching you areas that we refer to as what? Areas of liquidity. Okay. So it is getting to the latter end. After I finish, then I'll do few analysis with you, live analysis with you guys together before we call it goodbye. So this area here that you will refer to as a trend line. If we draw, we call it what? A trend line liquidity. Okay, so all trend lines are what? Liquidity levels. This guy here is what? Is a liquidity that has been wiped. Okay, so let me do this. This is a double. Let me change. Is the red color showing well, or should I change it? Can you both see the red color, or I should change it?
Yeah, the red color is fine.
Yeah, I think let me make it black so that it will be.
But your voice is not consistent.
My voice is not
consistent.
It's the network. Oh. If it is breaking, it is the network. Today, my network has really been bad. So Ebenezer and co, I apologize. Today, I don't know what's wrong with the MTN network. Even using Google Meet, I couldn't. That's why I have to change to Zoom. So I apologize. So this
network is bad, but they are planning to increase data.
Don't mind them. So this is kind of a double top. Okay. So I'm on the H1. So this is a double top liquidity, which has already been taken by this doji here. And that doji, after taking that liquidity, has also provided us with liquidity himself. So in the future, I'll be expecting that when price returns to this supply zone at the top here, okay, so when I teach imbalance, you understand something that is also happening here, because this area all is full of what? Imbalance that price needs to what? Price have already filled up to this point, but price needs to fill the rest. After filling them, the nearest zone where price can pick and then move down is this zone here. So I'll be expecting that price will wipe out this liquidity, filled this imbalance over here, and then we tap into that zone. So don't worry, I'll be explaining the imbalance so you get to understand what an imbalance is. Now, aside here being trendline liquidity, we can also have an equal low liquidity as well over here. Okay, so we are expecting that, for instance, if price doesn't break this trend line and wipe this liquidity, then we are expecting that price will go into this zone first and then come and what? Wipe out all the trend, both the trend line liquidity and the equal low liquidity, including this equal low liquidity over here at the down. So what we have, equal bottoms, equal highs, they are all liquidity. Where we have trend lines, it is what? Liquidity. That is why trading trend lines alone is not the safest, because you are making yourself part of the liquidity instead of part of the what? Institutions. Here you can see this was a previous what? High. Let me use previous high, which was what? Taken out, making it what? Break of market structure. So it was a liquidity level. Okay, I told you that previous highs are also what? Yesterday's highs, today's high, previous highs and lows, all of them, they are hot, they are liquidity. Yesterday's low, today's low, they are all liquidity levels that the market has what? Has made that go up, come down. It has to come and what? Wipe those liquidity and be able to what? Move price in their direction. So for instance, if price picks orders in this zone, I will be expecting it. Okay, there is no imbalance here. So even if price will reverse at this point, it will not be a massive reversal because there is not much this thing there. So let me go to H4 and see something. Yeah, so this area, as I said, is liquidity on H4. It's full of what? Liquidity on H4, because that is a proper equal hot low. So many touch 1, touch 2, touch 3. Okay, so here people will be trading based on what? support, which is cool. All right, it's cool to trade that, because myself, I can even trade based on IFC here, trading from this week to this, the close of this week here, as my IFC. So I'll expect price. And the reason why I can trade this zone is because there are a lot of what liquidity in this portion. So once price slash through all those liquidity, this level is what an inducement level of liquidity. I expect price to come down into the zone and then move back up. So that is my expectation. If you understand expectational order flow, the time I was teaching expectational order flow, if you understand it, excuse me, if you understand it, then you should understand what I mean by my expectation will be that what price will do, what will come into this zone after tapping here. So we will look at imbalance. So as you can see, this is another trend line liquidity, and you can see that price has already what broken through and wiped all this trend line liquidity. Okay, price has what wiped this and has closed this imbalance, has filled this imbalance here. All right, now I'll be giving you all the enhancers after we do supply and demand to help you filter out your strong zones from your weak zones, to know which ones to trade at a certain time and which ones to ignore. I don't like the way, oh come on, this network. Please, can you guys hear me? Hello, can you guys hear me?
Yeah, I can hear you.
Okay, all right, the network went off. All right, so far, any question, maybe what I'm explaining, if you are not getting it right, you can let me know, so that I know that you are not getting what I'm teaching correctly.
So I want to ask that liquidity, is it the same as
Hello, your line,
yeah, say
your voice was breaking. I didn't hear the latter. You said is liquidity the same as what?
is it the same as the support and resistance levels? Support and demand, and then resistance, and then those kind of lines.
Demand is different from
Are they
support.
the same?
Demand is different from support, and liquidity levels are not demand levels, but in a way they are support levels. That's why I was saying that you see that we have double bottom. Double bottom is typically a support level, and double top is typically a resistance level. When I explained to you when I was teaching that support and resistance is different from supply and demand. That is the next topic we'll be doing after imbalance. So you will now understand that supply and demand levels are not. And even you see me marking some areas that they are supply and they are demand. You see they are typically different from how we mark support and resistance. I've not taught you how to do that yet, but for what I was, like for instance here, see how I mark this? We don't mark support like this. Support, we need 2 points, resistance like this. We need 2 points to mark a resistance. Here, I'm only using this engulfing candle to mark that zone. That is a supply zone. This one down here is not a demand. This is an IFC, a support and resistance of IFC. Okay, it's not a demand IFC. So there is different. But then when you look at here, this is a support level, this is a support level, this is a resistance, this is a pivot point. Okay, so yes, that's why I'm saying that if you trend lines, they are all liquidity level. That's why those who trade those particular type of strategies, they are not very profitable. Okay, they win, then after that you see them losing so many trades. then they win 1-2, then they lose so many trades, they win 1-2, they lose so many trades. The reason being that they are trading at the areas where the fuel is. So always they get taken out of the market before the market goes in their direction. Evidence, I hope I've cleared your doubts.
Yeah, I'm okay.
All right. Your emails, I've received them. Don't worry. The email that has the videos, I don't know the password. It seems I'm not entering something well. So once I'm able to fix that, I will connect you guys. Otherwise, I'll have to create a backup. I think I have the backups somewhere. I'll have to look for them and then upload them for you guys afresh. Okay. So please bear with me for now. It's not like I didn't want to grant you access. I'm having issue with that email. So until I'm able to fix it, bear with me for now. All right. Let's look at the next thing. Holly, any question?
No, no.
Okay.
No, please.
Okay. So now let's look at imbalance. Imbalance. So for us to do that, let me get this thing. I want to explain something from where is this thing? Where did I put it? Please just a minute.
Prof, are you talking? We can't hear anything. Hello, Prof.
Guys, can you hear me?
We're not hearing anything.
Oh, sorry about that. I was saying I was looking for something for you guys, and the network is also it's doing slow. There was something I wanted to put on the what is the name? The page. That's what I'm looking for, and the thing is doing itself slow. Let me see if I can forward it from here. Please bear with me. I'm trying to get something, an information for you guys. Holly, Holly.
Oh,
What I'll do is that
hello.
what I'll do is I'm coming to create a WhatsApp group right now. I'll send the link
Okay.
to the Telegram page. You guys should join there. I'll drop something over there in the group right now. So I'm doing that.
Okay.
Okay, the two of you on the call, I'll add you now. Then
Okay.
come and join later. So Ebenezer,
Okay.
you guys should be checking your WhatsApp when I'm going to add you guys. Then holy crap, you have like two numbers. Don't even know which one to add. Let me add the two.
Any one of them will do. That is 020 or 024.
You are using the same DP, so I don't know how to differentiate that one. Okay, so I've created the group, so you should be able to.
Okay.
I don't know. It seems Ebenezer has. I'll have to send you invite link. It seems I can't add you to the group. Is he on the call? It's not.
Yes, I'm here. You send a
Yes,
invite.
I'm
I'll join.
sending you the invite on the listing. What is the name? In your DM. So check it and then you can join from there. I don't know if you have seen it.
Yeah, I've joined. I've joined.
Okay. So now let me share the information I want to share. Okay, so I've shared something on the page there. Okay, I'll use it to do explanation. That's why I shared it. Okay. I was looking for the slide, but the slide is on Google Slides, but the network is full in. So that's why I took the screenshots and shared them there. Please, you guys should download them so that when I'm doing the explanation, you can follow up. Have we all seen them?
Yes.
Okay. So imbalance is very important in trading. When when the meeting ends, please use the same link to rejoin so that we will complete the imbalance and then we close for the day. I think we have 7 minutes. All right, I think my slide to have opened up. So that is great. Okay. So when we talk about market imbalance, we are looking at areas where the market changes direction rapidly after hitting a certain area. Okay. Now, where can these areas be found? Okay, where can we find these areas of what? Imbalance in the market. So these areas are around support and resistance, supply and demand, and other blocks. Okay, so we can find them in not those areas. Now, how can we identify imbalances? Now, we can identify areas of support and resistance or supply and demand or other blocks. Okay, so now when you identify those areas, what you do for you look at how price reverse from those zones. Let's use the image below to illustrate how we find the imbalance on the chart. So now this is an image. This image is what we are going to use to do the explanation. Okay, you use it to do the explanation. Now, price was initially moving higher, then it hits a resistance zone. From there, we can see 4 consecutive bearish candles representing strong selling at an area of resistance. So let me show you. Yeah, the bearish candles are this one, 1, 2, 3, 4. Those black candles. That's what I'm talking about. All right. I have marked the candles with numbers to help you understand. So let's see it below. So as you can see, this candle 1, candle 2, candle 3, candle 4. So they are the ones we are looking at to determine our area of what? Imbalance. Okay. So let's look at the explanation. When we look at the candlesticks marked with numbers, candle number 2 is usually found to be the biggest in size. Okay, so as you can see, among the 4 candles, you can see that candle number 2 has the biggest body among them, followed by candle number 4. But mostly candle number 2 always, not that but let me put it like this, it mostly has the biggest body most of the time. Okay, now candle number 2 shows that sellers were in charge with not many hot buyers interested to jump in and stop the price from falling further or from falling lower. Always ensure that the candle number 2 closes lower than the high of candle number 3. Okay, so this is what we mean. You see that the close of the candle number 3, okay, is what? Is lower than the high of what? Candle number what? Number 3. So that is what we are saying here, that it should be what? It should close lower than the high of it. Mark the low of candle number 1. Mark the high of candle number 3. The zone between the mark lines is the imbalance zone. Let us now see the chart. So you see, when we mark the low of this candle number 1 and we mark the high of this candle number 3, you can see that there is a gap between the low of the candle number 1 and the high of the candle number 3. That gap between them is what we refer to as the imbalance zone. Is what we refer to as what? The imbalance zone. All right, so our time is up. Let's join again. Click on the link again and join. Okay.